What is up, traders? Happy New Year. So the question is, what's the easiest and fastest way to grow a small account trading? Well, hit the like button, make sure you subscribe, hit the bell notification so that way you get alerted to when I upload this content. And with all that said, let's dive in. What's up, everybody? My name is Heath, and this is Trade Talk. Now, in my opinion, the fastest way to grow a small account is in the FX market, all right, the Forex market. Mainly because if you're in America and you want to trade stocks, because some high-profile YouTube channels out there trade stocks and make $50,000 a day, and people think that they're going to be able to do that with a $500 account because he does it. Well, let me just be frank and real honest with you. That's not going to happen, and there's a lot of reasons why. First off, let me start by saying this. This is not financial advice. Everything that you hear on this channel or on this video is going to be just straight up nonsense coming from inside of my head. It's going to be highly speculative and highly hypothetical. All right? We're going to use math, and I'm going to discuss basically the fastest and easiest way to grow a small account in the Forex markets. With that being said, basically, the way I'm going to use these parameters or have the parameters set up, the way that I did the math by myself before finding this compound interest calculator was my initial deposit is $300. All right, a $300 opening balance in an American broker. And then every Friday, at the end of Friday business day, I will deposit $20 into my FX account to help the equity curve out a little bit and to also help the compounding effect out a little bit. All right. So basically, this compound interest calculator, I have my $300 initial deposit, my $80 monthly contribution, which, $20 a week times 4 weeks, $80, and investment time span, I have 1 year. And the estimated rate of return daily, compound frequency, is 1%. Now, I don't know how this computer come up with the calculation of $1,269. However, if you're able to achieve a $1,269 equity account growth off a $300 initial deposit, that is phenomenal. You've essentially 4x'd your account, which is not easy to do inside of a year. The best hedge fund managers out there in the world shoot for roughly 30 to 40% per year annum. Or 30 to 40% annum, which just means an annual return rate of 30 to 40%, which ultimately means that they beat the S&P 500 because the S&P 500 has an annual growth return of roughly 12% a year. So essentially, a 30 to 40% year return is a phenomenal return on your investment. A phenomenal. As a matter of fact, the best traders in the world do it. I'm throwing this video together basically to show you that mathematically it is possible to turn a small account into a large account. If you aim small, then when you miss small. If you aim big by trying to turn $650 into $1 million, that's aiming huge. You're going to miss huge. There's a massive chance that you're going to blow your account up. Now, in the U.S., there's something called the PDT rule, which means if you have less than $25,000 initial balance in your account, you cannot make more than three day trades in a 5-day rolling period, meaning you can only trade 3 times a week. A day trade, what constitutes a day trade is an entry in the market and an exit out of the market in the same day. Now, a lot of people avoid this by putting their money in offshore brokerage accounts. So if you got $650, why do I say $650? Because in the offshore brokerage account, you have to maintain a minimum balance of $500 in order to have a margin account. All right. And they have a monthly platform fee of roughly $160. It could be more now. I don't know. I haven't looked in a long time. But so essentially that monthly platform fee coming out of your small account is $160. $160 out of a $650 starting balance is a massive, massive hit. That's not good. Are you going to be able to make $150 a month? It's possible, man. Anything is possible. One thing that my father instilled in me as a young man was a strong work ethic and to believe that anything is possible. As long as you put hard work and dedication into it, you will see results. And it's the same with any strategy. The strategy that I teach is the best strategy to use in the Forex market, in my opinion. Once again, this is not financial advice. Take a look at my channel, look at the videos, see what I'm talking about, see what I'm looking for. I am a day trader. I scalp the FX markets. I look for opportunities every single day. However, I gotta say, if you're in Europe, you only want to trade during the London Open an hour before and 3 hours after, so roughly a 4-hour period. In America, you are only looking to take day trades from 7 a.m. in the morning to 11 a.m. in the evening, 11 a.m. in the morning. You're only looking for a 4-hour window. It's best if you get your trades in before 10 o'clock. All right, so roughly that time window closes. The best time to trade, in my opinion, is from 7 to 10. But I will and have taken trades as late as 10:30 before. Not very often. And the only time that I do is if I'm trading an FOMC news event. All right, so as you can see with this compound interest rate calculator, they got basically that $1,269 in 1 year. By my math, and my math could absolutely be wrong. I could be just completely wrong about this, but my math indicated to me that you could roughly double your account every 41 days by using that $300 initial balance, depositing $20 every Friday, once a week, and by making 1% per day. Only 1% per day. Is it possible to make 1% per day in the Forex market? Well, we're going to find out. So, I think I made like 6%. Then I made roughly 15% this week. All right. So if I was only aiming for 1%, I'm roughly 10% higher than I need to be. So it is possible to make more than 1% in the Forex market per day, but it's not going to be easy. And there are going to be days when you lose trades. Now you could risk 1% to make 1%. So that way, if you're wrong in an area or if you're wrong on direction, you only get set back one day. And there are going to be times if that you can make more than 1%. For instance, what I just discussed about how I had this week. So essentially, it is possible to grow a small account. But with the math states that if you make 1% per day, which it's not guaranteed to make 1% per day, but hypothetically speaking, if you made 1% per day, with my parameters, doubling your account every 41 days, that means you can double, let's see, basically you would do 300 times 6 because there is 253 trading days in the year, essentially. So if you do 41 days times 6, so basically 41 days times 6 is 241 or 246 days. All right, 246 days. So that means you can take your $300 account and double it 6 times, which gives you an ending yearly balance of $1,800. And then the next year, it's insanely increased because that $1,800 times 6 times a year would be $10,800. So you can see that mathematically, you can really grow a small account really, really quick. Because especially the third year with that $10,800, that turns into $64,000. So by compounding, those returns get massively outsized, and your equity curve growth rate would be parabolic, to say the least. So mathematically, it's possible. But it's important for you to understand as a new trader that there's a lot more involved in trading than just math and finding a good strategy. There is psychology of trading. There is, are you doing the same thing all the time? There's so much involved in becoming a profitable trader that some people just, in reality, the truth of the matter is some people just are not going to be able to do it. You can give them the most profitable strategy you have, set every rule in place, they still will not be able to do it. It's just one of those things where either they get messed up by the psychology of trading or they're not able to follow a set of rules, whatever it may be. There's some people will not be able to do. They just won't be able to do it. So unfortunately, that's just the way it is. Now, all that was just a mumbo jumbo basically of saying, is it possible to grow a small account into a big account in a few years? Absolutely, it is possible, mathematically only. All right. So we will try it ourselves and see if we can double an account in 41 days. And do I think it's possible for me to do it? I don't know. I don't know. We'll see. However, I want to bring your focus over here to the monitor real quick. I'm just going to bring up, I just wanted to say this because I didn't get to yesterday. We're just gonna call this guy Drew. I'm not gonna give his full name, but we're just gonna call him Drew. He made a nice trade yesterday, and I want to recap that trade for him and for everybody else in the C.T.M. because I don't think he made it public, but I'm going to, and I apologize if you get offended by this, Drew. My target was just hit. Thanks for the knowledge. 2.5 risk to reward, left 1/3 on targeting the low put in on the 24th. I know that trades don't always work out, but thank you so much for the potential life-changing information or knowledge that you are sharing. It is my pleasure, Drew. My pleasure. All right, so this is that low that he was targeting, okay, on the 24th that was put in. That was this low here. You can see that it's the last low, so there's a ton of sell order, or not sell orders. Yes, I'm sorry, there's a ton of sell orders residing beneath this low, which makes these people who went long on this candle, it automatically makes them by default a willing seller at a lower level, and markets tend to go after stuff like that. Now, he was watching this white line here, which is 1.56.548. That's indicated by the low or by the close of this bearish candle and by the open of this bullish candle. Now, I just want to bring your attention up here because this is also important. You can see this was the last market structure put in, and these candles, all of them, well, not this one, but this one, and this one, all three tested this market structure, and on this candle closed below it. However, the very next candle put in this, what normal retail traders would call a lot of buying pressure candle, and they would get long. However, you can see this is a classic bull trap. How do you wait for, or to find out if this is a classic bull trap? You simply can't. You just have to wait for the next candle to be put in. This candle right here was an indication that the markets was going lower, and this was Drew's target here. So let's go into a 5-minute time frame so we can dissect this trade for you guys. All right. So he was watching this market structure, this white line that was put in on an 8-hour time frame. His entry was on this doji candle right here. Okay. This doji candle was his entry. He got a little bit nervous when price traded back up to it. So I told him in the chat or in the private message to just, if it closes a 5-minute candle above that wick high, then he's probably wrong. The day is probably not going to be an expansion day. It could be a choppy day or just wrong on direction altogether. But you can see we never got that. I did not take this trade. Only he did. I made 1% on Euro USD yesterday only. I'm not going to do anything or show you about the trade because I was wrong and I wasn't shooting for 1% yesterday. I'm only going to start shooting for 1% for the weeks to come. However, it wasn't a loss. But anyways, you can see this thing went down and took out his initial target. This green line was that low. He took out 2/3 of his position. He left on 1/3 of the position, moved his stop to break even. So essentially, he is playing with house money. It's not a free trade because he is still risking money. The amount of money that he is risking is the amount of profit that he is in right now unrealized. That is what you're risking. It kind of gets under my skin when I hear new traders say a free trade. There is never a free trade. Never. You are risking something all the time. Yes, his initial risk is off the table. Yes, he did take profits 2/3 of the position size. A 2.5-to-1 risk to reward. It was a very nice, beautiful trade. But however, he is still risking the unrealized P&L. And that's okay. You know what I mean? When I do these types of trades, I understand that I'm risking that unrealized P&L, and I'm okay with it because the original goal was to make that 2.5% to 1 risk to reward. That was the original goal. And as long as you achieve your goals, anything else is just cake on top of some ice cream. Or vice versa. Ice cream on top of cake. The good stuff. It's always beautiful when you can rip more profits out of the market. And my strategy teaches you how to do that, guys. So make sure you like the video. Make sure you subscribe to the channel. Hit that bell notification, like I said, so that way you get alerted to whenever I put out content. And let's take some money out of these markets, guys. Happy trading.